Hello, hello, hello. What's going on, everybody? Welcome to Al Stock Trades. How's everybody doing today? Hope your Thanksgiving went well. So it's been a while since we've been online here. Been really incredibly busy traveling. Also, just last week, I got wonderful from some food, some good old food poisoning. I got norovirus, which is insane. But so I'm feeling a lot better. Still, under the weather here, but we're basically getting back. Definitely tired myself out this year, doing a lot, but I'm recovering pretty well now. So, in this video, we're going to go ahead and we're going to do some analysis and some just connecting the dots and really some cognitive development here in this video here. Okay, so. We're going to go ahead and kind of, show you what I'm looking at in the market. There's obviously a lot of things. We're coming up with our yearly cycle to look at the portfolio hedging modeling system and reissue some stocks that I'm looking at for 2026 that I'm going to be posting for lifetime access members. We're just basically getting ready for that part of the year. So we'll talk about a whole slew of things, some little clues regarding what CMS is doing, Counterpart, some unusual options activity, what smart money versus dumb money is doing. Some really good advice from Bill Ackman and Jeff Bezos, and the FOMC meeting that's going to happen in the 9th and 10th of this December, and what the new Trump Fed chair could look like, as well as some professional development. And with that, we also are releasing our Black Friday sale today. Now, usually I do this a lot earlier, but we are going to be increasing prices soon. So this is one of the, really one of the last opportunity to really get a huge discount like this, $1,500 off lifetime access. That includes lifetime access to our Discord, to our software that I went ahead and developed on my own that I go ahead and use. All the Al Stock Trades intrinsic value calculation, which is unheard of. And everything that we offer with the lifetime access, over 2.5 billion outputs of institutionally graded data. But with that, I really wanted to just focus on a couple things here. Okay, so Peter, the CFO of Clover Health, just recently published this, I believe, like 2 days ago. I just took the screenshot; it's fresh. I believe it was 2 days ago, and he said that momentum is building behind Counterpart Health. Right, demand is strong, especially from partners managing wide network PPO plans, and this is like pretty much a direct, what does that mean? Partners managing wide network PPO plans. Well, that's obviously insurance plans, right? We already know that the subdomain for Humana is out there, but could this mean, could this mean a Blue Cross Blue Shield? Could it mean, United Healthcare? Probably, maybe not that one, but who knows? Because they did get the vice president of Optum to join Counterpart. There's a lot, right? There's a lot. So, and then the biggest thing that they're advertising now is for the past 2 years in a row, the Clover Health Medicare Advantage PPO plan is ranked number 1 in the country on HEDIS quality for plans over 2,000 lives. So that's actually pretty impressive. I need you to memorize HEDIS for a sec. I need you to kind of put that in your head, because we're going to go ahead and be, dissecting this out. Okay. So what does that do, right? So that opens, what he's basically saying is open doors with third-party payers and providers. Then we show them the clinical outcomes through the white papers, and then we're identifying and treating disease sooner, delivering better health care, and they're executing, right? So, I need you to, so if you were to just kind of take the most important part of this is they're talking to other insurance plans now from their SaaS business. And I need you to just kind of memorize this word, HEDIS. Okay? Let's just memorize that. Now, then you have Blaine. He was the former, growth guy of Al Daddy. We call him, Dr. Al Dad here. So Dr. Al Daddy went ahead and said, everyone has a nickname, right? So I'm sure he's watching this. He's like, okay, I guess I'll be the Al Daddy, right? So Mr. Al Daddy here, or Dr. Al Daddy, my apologies for the disrespect, right? Which is, just look at that smile, right? So he said, with recent struggles across the MA and ACO industries, there is a strong signal from partners that Counterpart Health's Counterpart Assistant is the right approach at the right time for plans to improve HEDIS, stars, and outcomes, and the legacy solutions are not even close. So you already have someone whom, as you basically recalled, has been able to take literally $0 of revenue to $450 million plus of SaaS revenue for the company that he used to represent. And now we have this talent part of Clover, and he's basically connecting the dots, right? And this is very good. This is huge. These are all little pockets of information, crumbs that have not been interconnected yet by the market, right? And if you believe that like they need to be connected in order for you to essentially start buying, then by the time they're connected, it's already too late. Look at Palantir, right? No one wanted it at $7. We're banging the drums at $7. Go back in our videos. We were banging the drums on Palantir, and look where it is now, right? So there's that. So here's this. I'm just gonna take a little quick sip of my espresso. One moment. This is a live, right? So the other thing I want to talk about is this is very interesting. CMS just went ahead on November 25th, literally this week, right? Like 3 days ago, released a new proposal for new policies to strengthen the quality, access, and competition in the Medicare Advantage and Part D space. Now, what the hell did it say? Now, you could go ahead and you can read it here. I'm going to just go ahead and I'm going to just break it down to you in these words. I'm going to zoom in. Okay. It says, what did CMS say? Too many administrative measures. Too little focus on outcomes. Outcomes. Need to remove 12 measures that are administrative, right? Need a more stable and simplified fair system. Need less emphasis on process measures. Need better reflections on true clinical quality. Okay? So this is exactly what Clover has been pushing, right? They've pretty much been saying, hey, don't punish us for BS admin measures when our clinical outcomes are excellent. Now, I went ahead and I said that this is grounds for an appeal. Now, this is obviously, it's not a guaranteed appeal, right? But what they're basically saying is what Clover Health has said. Now, let me remind you. So if we were to go ahead and take a look at this, that I put this together and I highlighted it. On the left here, you basically see Clover Health's statement of when they announced that they were 3.5 stars for payment year 2027. By the way, next year they're going to be 4 stars, right? Payment year. I know it's a little confusing, right? And then the right side is November, right? Now, interesting, right after November 25, the policy proposal, you had these two posts from Blaine and Peter. It's very clear that CMS is skating to where Clover is already at. Again, these things take time. You're not going to make a lot of money this year-to-date cycle in Medicare Advantage when you have the behemoths like United and Humana bleeding, right? And for retail investors to think like that, then really, truly, you belong in the sector, in the socioeconomic sector that you are part of. I mean, it's just, and I'm going to show you with Bill Ackman and Jeff Bezos. Everyone wants a get-rich-quick scheme. But I'm telling you, how I went from homelessness to becoming a multimillionaire, it's not. There's nothing quick about this, right? It's been a long. I mean, look at all this. Look at all the gray hair I have, right? This is not an easy task. But let's go ahead and let's zoom in on this. So, Clover said this. Okay. The company believes the star rating methodology places disproportionate I can't even speak, dude. Disproportionate weight. too much caffeine. So it pretty much places disproportionate weight on non-outcome measures such as member experience surveys and administrative processes. Okay? Rather than actual clinical outcomes and health improvements. Clover continues to actively engage with CMS, the people on the right, in this screenshot, to ensure that its assigned star ratings appropriately captures the strength and quality of its MA offerings. Okay? So it is kind of weird that they achieve a clinical star rating of 3.5, but they're ranked number 1 of all the healthcare plans for clinical HEDIS, clinical quality measures. I remember I told you memorize the word HEDIS. Isn't that weird? Like, how do you get 3.5-star clinical stars when you are the number one rated plan for clinical quality? It's obviously, this is a joke. This is a trash joke. And guess what? CMS acknowledges that it is a trash joke. So they went ahead and said, beginning in the 2027 measurement year, CMS proposes to streamline star ratings by removing measures focused on administrative processes. What did Clover say here? It puts a lot of emphasis on administrative processes. This was published in October. This was published in November. You see how they're using the same words? Right now, CMS is trying to basically go where Clover's already at. Clover is leading this race. Amazon failed, Warren Buffett failed, and JP Morgan Chase failed when they tried to develop a healthcare insurance software. Clover developed it, and it is succeeding. And the market's sleeping on it. Okay, so they're removing the measures focusing on administrative processes or that do not convey variability in the quality among plans. So CMS is proposing to maintain the current star rating methodology that recognizes consistently high quality care while considering ways to simplify the methodology in the future. So, CMS proposes not to move forward with X, Y, and Z, which again, this one might actually impact Clover Health Equity Index, which is pretty good. But again, the administrative processes is what's really hurting them. So and this is the 12 unique measures that we pretty much basically try to elaborate here. Okay, so from that perspective, what does this ultimately mean? So let's kind of like dissect this. So CMS went ahead and basically posted this in November, following the same word methodology in October that Clover Health talked about. Right around when CMS published this, you have Peter and Blaine coming out talking about this because, again, what this basically says is I don't care how much administrative processes that Humana and United Healthcare put into their money supply. If you go ahead and take a look at this graph here, physicians versus administrators, this graph really pisses me off, but it is what it is. If you really want change in the healthcare system, you really got to see this. So you can see, really when private equity came online, physicians, I mean, really the amount of physicians in this country hasn't really grown. But yeah, a lot of they always talk about how doctors are the rich folks. No, dude, your doctor probably drives a freaking Honda, right? Or a Corolla. I guarantee you. Okay. There's only a certain amount of doctors, probably by the time they're 60, that are able to get their Porsche. And whoever gets their Porsche early, they don't know how to manage money, right? But you can see the growth of administrators, right? So this is exactly what CMS has been rewarding, right? But it's like so stupid because think about it. We spend the most on healthcare, but yet our life expectancy is that of a third world country, right? Or now we're supposed to say developing country, right? But it is all the same. So it's really interesting, right? Because I don't like the virtue signal. I hate virtue signaling. I say it how it is. You guys know who I am, right? It's interesting because now we're starting to realize that this is a mere reflection of the crapshoot of that what the healthcare system is. You have a healthcare insurance tech, whatever Clover is, which is a really interesting thing. The market really hasn't designed a place for it, right? And it's basically has the number one ranked HEDIS quality score measure in the nation, right? But yet the clinical star qualities doesn't reflect that. So what the clinical star qualities reflect is this graph. These star qualities reflect healthcare insurance plans that have more administrators than physicians. But then here's the problem. We have 10,000 Americans turning 10,000 Americans turning 65 or, every day, and it's going to go up and it's going to stabilize in the 2030s. But the problem is all these administrators, they're not doctors. They don't know shit about medicine, right? And what ends up happening is just check this out. You have all this money putting in administrators, but then the healthcare outcomes are garbage. The healthcare outcomes are really bad. You got people that are sicker, people that are more obese, people that, your surgical procedures, if you're not controlling A1C levels, then I don't care how good of a proceduralist you are, you're going to have shit outcomes, right? And what the government's starting to realize is the two things that's going to bankrupt the United States is Social Security and Medicare and Medicaid. And we have a very terrible fiscal policy spending, and we are borrowing from future generations. So this is a big issue that Clover Health is pretty much, it's the Doge of all Doges, right? We got $1 trillion a year growing spending every single year in healthcare, right? And then Clover has the essential tech stack to be able to help solve this issue and continue to keep advancing. Now, you can see this. It looks good. Excellent. So then here's the publication. Here's some other publications. But remember I told you to remember HEDIS? So I want you to just read this here real quick. So it says here, CMS is proposing to eliminating 12 star rating measures it characterizes as focused on administrative processes and areas where beneficiaries cannot distinguish performance between plans due to high performance and little variation. This shift in measures composition would increase the relative weight of HEDIS measures and CAHPS scores. So HEDIS measures is a big one, right? That's what Clover's ranked number 1 on. So now let's think about this. And this is what basically Clover Health released to the public because they're like, you know what, screw these star ratings. We're going to go ahead and, double down on what makes us good. We know that in 2027 and beyond, the star ratings are just going to be a derivation of HEDIS, right? We already know that Clover is number 1 in HEDIS. And there's going to be a less emphasis on administrative tasks. When you see all these blown up healthcare insurance companies that are blown up on the administrative sides, hence this administrators graph. So you can see that the whole healthcare insurance realm is going to become more towards outcome stars and HEDIS. And the legacy solutions are not even close because the legacy solutions answers are let's hire more administrators, screw the doctors, right? While Clover is like, no, let's empower the doctor by giving him software, him or her or them software to help with HEDIS stars and outcomes. So you could see that this connection of where we are going, right? Now, can Clover argue and say, hey, CMS, you gave us 3.5 stars for 2027. I understand you said that this is going to be effective after 2027, but can you retrogradely activate this to help us? Because, it's going to hurt us. You're going to have to be taking 50 million to 100 million off of the table from us. And to be quite frankly honest with you, we're trying to basically help healthcare and we're trying to revolutionize healthcare for you. So you got to help us here. So CMS can do 2 things. They can say, yes, we're going to help you, but they're going to have to help the other insurance plans. Or they can say, you know what, how about this? We will help propagate your Counterpart healthcare grow. We will basically help propagate, essentially, for Counterpart, we can help Counterpart, and that'll ultimately help with the lack of star ratings, the 0.5 star rating disparity, the half a star rating disparity that we saw in 2027. But what I'm basically seeing now is that what ends up is going to be happening now is by 2029, 2030, 2031, 2032, 2033, etc. Clover is going to be, from its star ratings perspective, it's going to go to 4.55 stars, right? Because if they're number 1 on HEDIS, right? And what that's going to do is now their Counterpart is, I believe, going to be growing more than their insurance side of the business because they're releasing their secret sauce. And the more data that they collect from these, partners managing wide network PPO plans, the more Counterpart's going to get better. And we've already seen other parts, of those folks talking about, the VP of product design of Counterpart talking about how they're going to try to get to the agentic AI version versus, all these, insurance plans are just trying to basically, deal with these administrative hurdles that they have, right? And you've seen kind of the Elon Musk approach. You got to really cut 90% of these off. You got to fire 90% of people and keep your core 10%. Because all these administrators are big fat bureaucracies. And you got to go back to Charlie Munger's era when he's talking in the Almanac, his book, where he's talking about how bureaucracies are so big, fat, and ugly that they just don't function correctly. Okay. So there it is. So there we have this. We talked about this. Let me think. All right, what else? Okay, now let's talk about CLOV. So recently we've seen, and this guy posted on the Reddit page. He said that, can someone post this in the main CLOV group? Moderators keep deleting this. I don't know if it's moderators. I think it's the auto mods. I'm friends with the moderators, great people. No, I mean, listen. So you do post something incredible here, and you're not. Your username says the confused investor. There's nothing confusing. There's no. The username doesn't check out. You're not confused at all. You're actually correct. So there's a big call. Someone's buying at around $2.50 on May 15, 2026, and you can see that a call buyer for Clove at $125,000 is a big bet. Now, why are they betting? So what's going on? So I need you to focus on two things here. Big money bet on May 5th, May 15, 2026. Now, why? What's going on? Okay, so let me kind of break it down. So in February 2026, they're going to release Q4. Again, this year is a bullshit year, right? This year is just kind of the transition to growth, right? You got Part D, really hurting us and all these other, things going on. So really the big thing that I want to take away from Q4 2025 is, which is going to be in February 2026. I know it's kind of weird how they report, but that's how it is. I want to look at the guidance, right? They already gave us preliminary guidance in Q3 2024 earnings. That just happened a couple weeks ago. And they pretty much basically said, hey, you know what? We're going to be profitable on a GAAP adjusted basis, which is like, accounting standards, in next year, which is like in a couple of months from now. So May 15 is when they're going to release on average. You can see, like, I'm going to show you what this guy's doing, so you don't, like, you're probably thinking, what does this guy know? This guy's no genius. Okay. You don't need to be a genius to do these things. Okay. I'm going to break it down for you. Okay. So if you go to Q1 of Q1 of this year, you can see they posted earnings here on May 16, right? So it's very clear that they're going to be posting. You can go ahead and go to Q1 for 2024. And you could say it's May 17. So this guy is just trying to play it safe. And he said, by May 15, we're going to have our first profitable quarter for Clover on average. They said the full year is going to be profitable. We don't know. We may have one unprofitable quarter. Again, to become a triple dragon, you need 4 consecutive quarters of net profitability. Okay. And regardless, there's a high probability they're going to be profitable next year. So this guy's placing a bet. They're like, there's no way the stock is going to be $2.50 by Q1 because they're going to be profitable, right? And then in terms of the price to earnings, then you could do a price to earnings calculation. When Oscar was profitable, they had a price to earnings of 48, right? So, you take whatever, what they're going to make next year and multiply that earnings by 48, and that gets you the stock price. So if they're making, let's kind of give it a little bit of a low end. If they're making 50 million, and then you divide it by 512, that's about 9 cents of earnings. You put 48, that's $4.68. Now, if you're thinking, hey, Al, no, I think they're going to make 150 million divided by 512, that's about 29 cents of earnings multiplied by 48. That's $14 stock price, right? So you can see the bet that's basically being made here, right? And again, it's not rocket science if you understand how to do the math, which is exactly what we teach in Lifetime Access, let alone all the softwares that we have. Okay. So now we went ahead and went through that. Okay. Yes. So you could see stock started dropping. Dumb money sold like what dumb money does. And then smart money came in. And right now, dumb money comes back. Dumb money's basically, going hard, and now you can see the stocks going up. Okay. Now let's just go ahead and just take a little quick hiatus and let me listen to this here. I want to know if the audio is actually working here. So I'm going to just give me a moment here. Oh, 1 moment here. Let me make sure this plays here. Hold on. I'm going to mute myself here. Hold on.
Asked Warren Buffett, why don't more people copy your I once asked Warren Buffett, why don't more people copy your investment strategy? It's not that difficult to understand in principle. And he said, oh, Jeff, that's easy. My approach is a get rich slowly scheme. People don't like those. And so, but there's a lot of truth in that for everything, which is if you can think in terms of 7 years instead of 3 years, right, and you can defer gratification and think long term, that will give you a head start against all of your competitors, because most people can't do that. And then the last thing that translates to Blue Origin really well, all of these do, is what we call taking professional pride in operational excellence. And so I'm talking about the details that nobody but you will ever know.
Okay. So as you can see, he said a couple things. He said that, Warren Buffett pretty much, Jeff Bezos asked, one billionaire to another asked, hey, why don't people just copy your investment advice? You can easily look at the SEC 13F filings and say, hey, just copy Warren Buffett. And Warren Buffett says, hey, the reason why people are not like that is because they want to get rich quick scheme. And Warren Buffett is the type of investor that you don't get rich quick on. Like United Healthcare, right? Yeah, he bought, and yeah, you could have bought in here and made your money, but really it's just then it's fallen down. So you really got to hold for the long term, and this is not going to get healed until 2028, 2029, referencing Humana's earnings. And this is cross-pollinating earnings when you have to look at other industries and conglomerate all the pieces that are not connected. Because listen, if you're expecting CNBC to give you the whole picture on a stock, by the time you know the whole picture, buddy, you're buying at the top. It's too late. You're done, right? So, okay. So now let's go ahead and now let's listen to Bill Ackman. Okay. And he's going to talk about something important here, right?
The best investments are generally ones where everyone else thinks you're wrong. In November of 2008.
So what did he say? He said the best investments are when everyone thinks you're wrong. Listen, how many people think that I'm wrong? I was banging the table in Palantir at $6.50. Everyone's like, you're stupid, you're wrong, yada, yada, yada. We were talking about NVIDIA when it was at $400 billion market cap. Now it's at 4.5 trillion. No one's telling me I'm wrong now. And when Clover was at 60 cents, everyone was like, no, you're stupid. Why are you buying more? And now look where it's at, right? And now people are coming at me because they're like, oh, you're wrong. And again, usually when it's like that, and it's going to be profitable, it's going to be a triple dragon, it's very clear that these people that I call them the matrix security defenders of poverty, they are kind of a ceiling in which they guard their poverty like it's their gold. And these people will always become poor, and they will always be poor. And this is their part of the simulation, right? So these people, they always think like, oh, this guy's going to go bankrupt. And that's their goal. They just doubt. They have a fixed mindset. They don't have a growth mindset. So these defenders of poverty, they're just going to continue to keep saying that. And then as the, stock continues going up and up and up and up, they're going to end up basically following the fad. Then they're going to end up basically buying at the top and then blaming whoever for buying at the top, because they can never look in themselves in the mirror and say, maybe I am poor because of my own, professional development, right? Maybe there or lack thereof, right? So let's listen again to what he has to say, because again, you really want to find companies where everyone thinks you're wrong and see something in them, because that's how Michael Burry made a lot of money, right? And Bill Ackman himself. Bill Ackman shorted the housing market too. He made millions, but he doesn't advertise that because people won't like him. But, it's just, that's the name of the game. Okay. That's Wall Street. I'm just trying to teach you Wall Street. Now, okay, let's go ahead and just kind of replay this, please.
The best investments are generally ones where everyone else thinks you're wrong. In November of 2008, a shopping mall company called General Growth, second largest shopping mall company in the country, the stock went from $63 a share to 34 cents in like 6 months.
34 cents. $34. What? Doesn't that sound like Clover? Doesn't that sound like Clover? Right?
And the reason why the stock went down 99.5% was they had a lot of debt. They borrowed money in the CMBS market, which is the securitized real estate market. And that market shut down during the financial crisis. My bet was, the malls had gone from 93% occupancy in 2007 to 95% occupancy in 2008. So the occupancies were up, the rents were up, the net operating income was up. And so the assets were fine. So I said, well, we're going to do something different.
So what have I noticed, right? Assets are being stabilized. Cash only went down by $4.5 million this year, but growth is up 30+%. They're going to be net income profitable next year. They were free cash flow positive last year and most likely free cash flow positive next year. They are having another system that is basically generating a lot of interest from HEDA scores. I'm seeing the government heading towards their way. There's a lot of internals that I've looked at that the media hasn't looked at, and it's just so beautiful, right? And you know, it is what it is. I mean, this is, you know, people can't put these things together, but this is why lifetime access is so important. We have 2.5 billion outputs of institutionally graded data, but what makes it great is we all come together inside where we use the data and we use our life experiences that Peter Lynch talked about to find these companies and to argue them until there's nothing to argue, until we all come to a conclusion. Right? That's the beauty of lifetime access, and you'll see it even more clearly in the next 10 to 15 years.
We bought 25% of the company in the market for $60 million, starting at 34 cents a share. I joined the board, and then I helped the board run a process that benefited not just the creditors, but also the shareholders. And the stock went from 34 cents to ultimately $31 a share. But it was, so again, the most contrarian investment you can make buying something is to buy stock in a company going bankrupt, right? Because everyone says it has to go to zero.
And what have we seen this example? When, remember I said book value? Clover was trading at book value, then it exploded. Now, Open Door, still, I don't really, it's hard to see a turnaround with that one, given the interest rates, potential turnaround. You got a new CEO, but even that was trading at book value, even below book value, right? And look what happened. It went up 100 to 500% plus. Okay. These things are there, but you got to look at the internals of the company. The problem is you need the software and the people to do that.
And if you have to do a little bit of work, a lot of work, and have an insight, those are the best examples.
I once asked Warren Buffett, why don't more people?
And you have to do a lot of work. You have to. I mean, look at all the work that we've done. You know, again, I want these videos in the future when people look back on them and they see the portfolio up $20 million, they're going to be like, how the hell is this possible? Well, watch the video. That's what it takes. You don't want to do that? Then, oh, you know what? That's fine. You know, stay in your lane for now before the robots take over and take your job and AI takes your job. And then you're going to be forced to live off of universal basic income. That's the reality, folks. That's why I'm doing this. That's why I'm trying to show you this. Anywho, December 9 and 10, we're expecting the meeting associated with summary of economic projections. Rate cut or not, I don't know. There's about a 0.7% chance that there's going to be a rate cut. However, 2.5% chance that a rate cut is going to happen next year. Why? Mr. Hassan emerges as a front runner for Trump's Fed chair. Definitely bullish on running the cut rates. Again, this is a MAGA insert. This is going to be pretty good. Now, do I want the Feds to be independent? Yeah, I do, but ultimately I'm in the market to make money. This is going to help me make money, and that's how it works. Now let's go ahead, and I want us to basically listen to this video here, okay? So let's go ahead and let's just, replay this here, and let's listen to this, please.
Everything changed for me when I understood this philosophy. Learn to work harder on yourself than you do on your job. That's the simple philosophy that changed my life forever, starting age 25. If you work hard on your job, you can make a living, which is fine. If you work hard on yourself, you can make a fortune, which is super fine. I didn't mind working hard on my job, but things didn't seem to change that much. Then I started working hard on myself to qualify. So let me put it in a philosophical phrase now. This is worth the price of whatever it costs for you to be here today. Here it is. Success is something you attract. Success is not something you pursue. It's something you attract by becoming attractive. And the whole scope of this we call now personal development. You can have more than you've got because you can become more than you are. If you can multiply your value by 3, by 5, you can easily multiply your income by 3, by 5, by 10. But the key to doing it is to work hard on yourself. Be responsible, be a growing, attractive, powerful, skillful, communicating human being, and the world belongs to you.
There it is, ladies and gentlemen. So what did he just say, right? What the hell did he just say, and why I wanted to share this with you? Listen, guys, you can multiply your mindset and your understanding of the world by 3 to 5 to 10, and that will multiply how much money you will make in this world, okay? I'm walking proof of that. And guess what? My lifetime access members are walking proof of that as well. Okay. Any lifetime access members disagree? Please comment and attack me if I have failed you. Right. All right. So from that perspective, we're going to go ahead and shift to the software, and we're going to go from there. Again, take advantage of the Black Friday sale. There's nothing out there that you can buy that can multiply your worldly experience by 5 or 10. I can guarantee you that, right? We teach you over 200 years of information packed into this with live data that gets updated every single minute. 2.5 billion outputs, over 2.5 billion outputs in just literally impacting and just hitting your computer. And we clean it up in an Apple-like instance where we make it easy and digestible to understand. I'm creating something that is only existent to that of the top 0.001% of the folks that are in New York and those investment banks like Merrill Lynch of Bank of America, JP Morgan Chase, and a lot of hedge funds that have these, one of 350,000, user interfaces that cost $30,000 a year. You have them right now at the price of lifetime access that gets to be transported to your children, right? Your children can get this, right? Free of cost. This is generational wealth creation. Now, let's go ahead and let's go to the VIX. Now, if we go ahead real quick, and if we look at do some technical analysis here, you can see this IWM. That's small caps, right? And we've been basically in this channel before. We were in this small channel, and then we kind of broke down, and then we went down to the lower version of RSI, and then now we're MACD looks pretty bullish, and we're seeming to be, seeing. Let's see if we're going to hit this resistance level. But if we pass, then we should be on this range here. But we're trading in this channel right now, and we're in this upward channel, and you can see we're about to approach new all-time highs for the IWM. Rate cuts are coming in, who knows, in December, and there's that. Now, with that, you could see that we started to really, by November 20th, we started to rebound. So let's see if Clover does the same. So really, here's Clover, and you could see by November 20th, Clover started to rebound as well, and that's the power of IWM. And you could see with this, you have this really, it kind of looks like a bearish descending triangle, but usually any form of triangulation with Clover, especially with this MACD about to signal to the upside, really signals that we might be at a potential breakout region here, right? And then so we'll be following this, and there is a big, huge gap here. Now, do we fill in the gap here at there is a gap here, but we really haven't filled it, and I don't think we might. Who knows, honestly? But we're most likely about to approach the median version between the max of 480 to the min of 60 cents. Now, what I wanted to do is I want to look at the VIX. The VIX is the volatility index. The problem is, how do you understand this? It's so messy, right? We have to clean it up, and that's what the software does. So we got a VIX of 28.27. So this is the ultra high. The median high was actually like this is like the far end height, and then this is the closing 226.42. So what we can do here is we can do we could do a couple things. First, let's say when the VIX is over 50. Let's go ahead and analyze that. When we'll go ahead and do that, it marks you 6 times in the history of the VIX where it was above 50. And you can see it marks them here. And from that perspective, you can see it historically marks the bottom of the market, right?
K-Trace.
And the last time we've hit this was on April 8th, 2025. And we could see that we're approaching more of this 2009 timeline because we're, it's around this timeline, and in about 12 months we're going to be up, and so it seems as we are going to keep going up and up, and there's about 100% chance, and after the 18-month mark, we're going to basically be rock solid up. But here's the IWM, and you can see the IWM within 12 months is going to be pretty good as well, and so that looks pretty good, and we're also in this timeline as well. So it's looking pretty good for both IWM and S&P, and you can sort the analysis from both angles here, so you can see how powerful the software is. Now, what I want to do is I want to take a look at 20 26.42. So let's look at 26.42 and let's analyze when was the last time that happened. The last time that happened, and you could see there's been a lot of instances in 1990, but the last time it happened was November 20th. November 20th is when we spiked in terms of the VIX, and then we crashed back down. So what this software does, all part of lifetime access. You guys get access to this, which is pretty impressive. It happened 78 times in history, and this is all the times it happened. But usually, you could see it happens usually as we continue making new highs. It happens as we keep going down, making new highs. Maybe it caught some bottoms and little bottoms. And again, it's hard to determine this. So what we do is we conglomerate all the data. We look at the 3 month, 6 month, 12 month, 18 month, 24 month, 36 months, and literally 60 month, 5-year cycle. Take all the percentages, analyze them, and compress them down into a mean, median, percent positive, and a z-score standard deviation algorithm that allows you to be able to understand kind of what the hell's going on. And you can ultimately see within 3 months, we have a 71% positivity that we're going to be up, which is true. We're up right now, right? I mean, if you go ahead and take a look at this and look at the, Yahoo Finance, you could see now the market, hey, U.S. caps extend winning streak, right? And it's okay because we had the data, right? So definitely 3 months, 6 months up, it's pretty good. And then we kind of hover around the 60% range here. But again, we have to conglomerate the above 50 that we had in April in conglomeration with this. And soon we'll be able to conglomerate 2 life cycles of probabilities that happen into one. And that will be epic. That's when you start getting into Jim Simmons' quant fund analysis, when you can start looking at multiple instances, right? So there it is, right? So from that perspective, that's pretty much basically where we're at right now from this, right? So there's that. In terms of intrinsic value, we'll go ahead and do it once we get a better picture of things. If you do the Contrarian sector analysis, right now, it used to say healthcare. Now healthcare is down here because, again, a lot of people purchase healthcare, right? You had Michael Burry purchase Molina and United Healthcare. Then you had Warren Buffett bought United Healthcare. So now really it's consumer staples, real estate, and materials and financials. Now, my future father-in-law, financials, he is one of the directors of a small bank, regional bank in California. And that stock is up 40% plus this year. And it's quite interesting, regional bank-wise of things. I expect these to continue going up. And, his net worth pretty much, almost doubled, right? Which is quite impressive, right? And they offered a lot of liquidity to the bank, which is pretty cool. But a lot of regional banks, I think, are going to do well. And a lot of these old industries are about to have a gross margin expansion because of the technologification of AI and productivity increase that we're going to see in all these industries, including healthcare. And here's institutional ownership. Let's go ahead and do CLOV here, institutional ownership. And you could see that investor holdings is quite stable here. The stock price dipped, but investor holdings is good. We have number of 13F shares has dipped from 146 million to 135 million. So about 15 million shares. But you have to understand this is in Q3. This is a most likely tax loss harvesting, right? So you could see here Q3. You also saw a decrease in 2023. And then here's Q3. This was a forced increase because the stock went parabolic and retail drove this gain. So then these folks had to follow because they wanted to catch that alpha. And we'll have that alpha soon get caught up as well. And then you could see kind of a stabilization here. But ultimately, usually Q3, you could see here in 2021, there was a drop. And that's because, again, there's a lot of tax loss harvesting, and then we go up, right? So there's some tax loss harvesting embedded in this. But in terms of this perspective right now, we have we're starting to get some congruency with the stock price along with the and total invested. And right now the stock price should be around 350, right? And that was right around the insider, not the insider buy, but when they purchased it in the good old buyback, right? Here's the ownership percent. We're at 26.58%. Again, how much of that is tax loss harvesting? I'm not too sure, but you can start to see the stock price is slowly starting to recover here, right? And here's all the other things as well. Now, again, this is pretty, we'll analyze all these right now, but if we zoom in on here, you could see the put to call ratio here is 0.46. And so as this goes lower and lower and lower, you could see as the stock price went up, the put to call ratio went up, but then now it's really dropping. So a lot of shorts are closing their position. So if you were to score this utilizing our metrics here, you could see that is a bullish score of 6 and a bearish of 3. So new positions has slowed down, increased positions has slowed down, and reduced positions has unfortunately, decreased as well. So these three things are things that we should monitor. But again, this makes sense because this most likely is tax loss harvesting, right? So, there's that, right? And there it is right there. So from that angle, we got this, and there it is. So next year, Clover is going to be profitable. I don't really see a lot of other stocks going from net income negative to profitable next year in a position where Clover's in. There's a huge demand for AI data centers, and now the next order of derivative, which is AI in healthcare. CMS is changing itself to engage in interoperability effects. And that's about it, guys, right? So let me go ahead and just look at the comments. How are you guys doing? What's going on? Oh, no. This is going to be, this is, you guys seen Palantir. No one's talking about Clover. People are going to start talking about Clover. It's going to be great. No, I know. I'm not going to forget about you guys. Let's see. Let's see. Oh yeah, he owns 3 Mercedes. Yeah, I have a Tesla. Let's see. Hey, what's going on, guys? So yeah, you guys caught me at the end of the live, but there's a lot of good stuff here. Literally 48 minutes of just solid due diligence. Just wanted to basically put it out for you guys. Again, for all you guys out there, we have our Black Friday coupon sale. Coupon code Black Friday. Take advantage. $1,500 off. Lifetime access to every data point that we have, all the software part of the Al stock trades. You have it along with the lifetime access to the Discord, all this institutionally graded data that can be on your cell phone, that can be on your laptop, anywhere in the world, and it gets transferred onto your children, which is quite unheard of. And there it is, guys, and all the stock picks that we have from an educational perspective. But that's all I have for you guys. But there'll be more. There'll be more. I appreciate you guys, and that's all I have for you guys. And by the way, we talked about hymns on our inside of our Discord, and you could see that was a pretty good pretty good time point, and it's up 18%. So that was pretty good, guys. With hymns, definitely hymns had a dropped pretty low, and you could see it has a ways to rise, and that's something that we were talking about on in terms of the dip there. So a lot of stocks dipped, and we talked about it internally in the live, right? And I heard Humana is suing CMS on stars, and hopefully that works, and others will sue. And if one lawsuit wins, the others will get it. And who knows, if we get 4 stars, then that'll be great. But overall, do we need it? Not really, because of everything I talked about in the video. So any of you guys, appreciate you all. Take advantage of the Black Friday coupon code. I'll see you in the next one. God bless you guys, and stay safe out there.